Next is types of orders. Now you get market execution orders, and then you get pending orders. So for market execution, you get buy and you get sell. For pending orders, there's 4. You get your buy stop, you get your sell stop, you get your buy limit, and then you get your sell limit. So what are these and how do you place them? So first one, market execution allows the trader to place a trade at the agreed price the broker offers. This is whereby you click or tap the buy or sell button and your trade will be placed in a matter of a second or two. So you click the buy button, you click the sell button, the trade is open. This is a market execution trade. If you click buy, your order will be open at the bid price. If you click sell, it will be open at the ask price. So let's say we place in a market execution trade. Okay, this is how it would look. As you can see, that is the currency pair. For example, Euro USD. Second one is the type of order. We're keeping it at market execution because this is the example we're going through. Okay, third thing is your lot size. So that's where you would be able to change what lot size you're using, whether it's 0.10, 0.01, a lot size of 1.00, whatever the case might be. Next is your stop loss level. Okay, we're going to get into stop losses a bit later. But that's where you enter your stop loss level. Next is your take profit level. We'll also be getting into that a bit later. Okay, you'll enter your take profit level over there, and then you would either, ask price is on the left, and your bid price is on the right. Like I said, depending if you're buying or you're selling, that will determine your ask or bid price. So let's say you're gonna sell, you'll just click that sell button, and it will be opened at 1.12627. Then your trade will be opened. Okay, it might just because of the fluctuation and the spread and all of that kind of stuff, it might just be a bit above or below the 1.12627, but it will open instantly. Okay, if you click the buy button, right, you purchasing Euro USD at 1.12655. Right, that is market execution. All right, this will be an example of a market execution trade. So let's say we want to trade GBP JPY. So I'm just going to give it, let's say, a sell, and we're going to put our, let's say, stop loss 156,200, and our take profit, let's say 155,500, right? So what you'll do is you'll press trade. Okay, market execution. You'll add whatever lot size you want. Let's say 0.10. You'll put your stop loss. I haven't forgotten now, to be honest. 156,200. Okay, 156,200. 156.200. And stop loss. Take profit. Let's say 155. Let's say 155,200 as well. Okay, so now let's say we want to sell. We click the sell by market, and then your trade will be automatically placed, as you can see that. So let me just remove the line. As you can see, your stop loss is over there. Okay, your sell is where the green, so let me just do this. That is your stop loss over there. Okay, that is where you place the sell, this price over here. And then where did I put the take profit? Okay, there we go. Take profit is all the way down here. That's your take profit. So if the price decreases from that green line, if the current candle goes all the way to TP, then you profiting. But if it goes up and hits stop loss, you lose. That's a sell. So let's go AUD JPY, AUD USD, sorry. Let's say we want to buy. Okay. So we go trade, make sure it's market execution. Remember, do your lot size. Let's say we want to do a smaller lot size. Stop loss needs to be below. So let's say 7.2. Let's do that. And take profit, let's do that. Okay, now you say buy by market. Now you'll see it is opened. Okay. Okay, remember it's in the minus now because of the spread, so you basically paid the spread. But as soon as price goes above this sort of green line, then you would profit. But if it carries on going down, you will lose. So that is market execution. Next, pending orders. The first one is buy stop. Buy stop now entered at a stop price above the current price. In other words, it's an instruction to buy a currency pair at market price once the market reaches that specific price. The trade will only open once that specific price has been reached. So buy stop, order placed above price, and price keeps going up. Right, here's an example. Buy stop, right, expecting price to go up. So as you can see here, there's a current price, okay, 149.945. Now we're expecting that price is going to increase, so we want to enter at 150.886. So that is where you would put your buy stop. That's your buy stop price. And then as you can see, price increased right there. Once it reached 150.886, the buy stop has been opened as a buy, and now that is the price above it, and that's how much you have profited. So how does it look when you're entering? So here's the example. So buy stop order on GBP JPY, okay, not market execution. You change it now to buy stop. You enter the lot size you want. Now the price, this is where you want it to enter, okay? For example, 149.945. If we go back, right, our example would be 150.886. So 150.886. That's where in this specific trade we would have entered over here by price. Over there, 150.886. That's where we would have entered it. Okay, you put your stop loss. Obviously, your stop loss level would be below that price because it's a buy stop, and then your take profit would be above there. But we'll get into these. Ask price again on the left, but bid price on the right, and then button to place the buy stop trade. This is an example of a buy stop. So let's say we trade in USD ZAR, for example. So now let's say we see price and we think it's going to increase to, let's say, 15.5593, right? So let's say we want to enter at 15.3600. Okay, 15.3600. So you trade buy stop, not sell stop, buy stop 15.3600. Now obviously your stop loss needs to be low, below. So let's just do this. It's just an example, it's not actual. 15, let's say, let's just do that, right? And you'll see it's blue. You place, and as you can see here, so it won't be open. As you can see, you're not winning or losing any money. So let's say, for example, like it carries on going down without even touching the buy stop. Let me just remove this. So it goes down and goes. It won't open up until it reaches this point. So once it reaches this point, then it will open a buy. If it carries on going up, you will profit. But if it comes up, opens, and let's say it comes here, yes, you'll be in profit. But if it decides to go down from there, boom, you'll lose. Right, that is a buy stop. On to the next one, sell stop. Another pending order, opposite, the buy stop. So this is entered at a stop price below now the current price. In other words, it's an instruction to sell the currency pair at market price once the market reaches your specific price you've entered. Now, the trade will only open once that specific price has been reached. So order placed below price, and price keeps going down. Okay, let's go look at this example. Expecting price to now go down. So there's your sell stop price, and here's the current price. So the current price is 157.147. You expect price to go down, so you want to enter at 156.164. So as you can see, price went down. It opened at 156.164, and then price fell to 152.510. Okay, so how would it look? You know, you got your pair, you got your sell stop order. Okay, not a buy stop now. Now it is a sell stop. You change your lot size to what you're using. Here's the price that you would enter at. Okay, that's where you would enter your price at. Stop loss, take profit, and then ask price, bid price, and then that's where you would press place to place the sell stop. This is an example of a sell stop. So let's go GBP, JPY. Let's say, you know, you assume that the price is going to decrease from, let's say, 155.850. Okay, 155.850. So what you're going to do is you're going to go, let me just remove this. You're going to go trade. Then you're going to go from market execution, you're going to go sell stop. At the price, you're going to go 155.850. Stop loss above, let's say 30 pips, so it's 156. Let's just put it this 0.00. Okay, take profit. Let's go. Let's make 85 pips. So, you know, if I just make it simple. Okay, like that, and you'll see it's blue. But as soon as it's gray, for example, like that, you won't be able to place it. So make sure it is blue, and then you say place. As you can see, there we go. But can you see the trade hasn't been opened yet? So what needs to happen is this price, as you can see, price is above. Here's the sell stop, this green line. Price is above that sell stop. So as soon as this price comes down and passes this level, then only will the sell be open. And if the price still decreases to take profit, that's when you'll profit. However, if it comes down, touches, you know, the sell stop and goes back up, then you will lose. That is a sell stop. Next one, buy limit. This is an order placed below the current price, expecting it to rise up after that the price has been reached. So the trade will only open once that price has come down, touches that specific price you put, and then needs to go up from there. So it's a drop, then increase. So order placed below price, and price goes up from, you know, that order. Example, expecting price to go down and then go up. So let's say you place a buy limit price at 150.004. Price needs to come down. The current price is above that, 150.966. So it needs to decrease, and then the buy would be open, and then, you know, hopefully it will increase. As you can see there, the buy limit opened and reached down, okay, at 150.004. It went down a bit further. You would be in, you know, the minus for a little bit, and then it shot up to 152.807, where, you know, that's the current price. You would now be in profits. So how you'd enter, it wouldn't be a sell stop or buy stop. You would enter a buy limit order. Change your lot size to what you're using. This is where your price would be entered at. For example, 150.004. Stop loss, take profit, okay? Don't worry about the expiration, that's nothing important. Your ask price and your bid price, and then that's where you would play. This is an example of a buy limit. So with a buy limit, what, for example, okay, this is gold, for example. When you want to put a buy limit, you're expecting price to decrease to a certain level, and then from that level to shoot back up. Okay, so let's say you analyze and whatever. Let's say you put as it's just, I'm just giving an example, guys. Don't really trade like this, but let's say there. Okay, let's say, okay, let's put it 61%. So we'll remove this zone. Let's say over here. Okay, so let's say you believe that price will decrease to the 61.8% and there's sort of support, and then increase from there. So you're looking at, let's say, 1817 for the price of gold. So what you're going to do is you're going to put a buy limit. So you go trade and you go buy limit, price 1817.00. Okay, stop loss will be below, let's say 1810, and take profit will be above, let's say 1850, just for example, and you'll see you place. So what this means is, okay, never mind. So what will happen is price needs to come down. As you can see, like, it won't also be open, just like the sell and buy stop. So in order for it to open, price has to come down, then reach this level, then it will open a buy, and then if it increases from that, okay, going back up, then that's when you will profit. But when it comes down and it opens the buy limit into a buy and it carries on going down, you will lose. Right, so just be careful with buy limits. But that's basically how buy limit works. Alrighty, sell limit. Order placed above the current price, expecting it to fall down after the price has reached above. Okay, so opposite the buy limit, sorry. The trade will only open once that price has come up, touches that specific level, and then needs to go down from there in order for you to profit. Such like that. Okay, prices comes up, opens the sell order, and then if price reaches down, you would profit. Okay, so as you can see, expecting price to go up and then go down. Okay, that's the current price, 132.778. You're expecting it to reach first, go up to 134.757 and then crash down from 134.757. So you put a sell limit over there. Okay, as you can see, price went up, it passed 134.757, it opened the sell and then crashed down, and you started profiting over there. It reached all the way down to 129.601. Okay, remember, it's not a buy limit, it's a sell limit, so you need to enter a sell limit over there, not market execution or anything else. You enter your lot size, that's the price that you want to enter at. Stop loss, take profit. Again, ask price, bid price, and then you place the sell. Next will be a sell limit example. So I'm going to take GBP USD for the example. Let's just say, for example, here is a resistance zone, okay? And then also you put your Fibonacci, whatever the case might be, whatever strategy you're using. If you're using the BCFX system, the BCFX strategy, then you use that, okay? Now let's say you want to enter at the 61.8% Fibonacci, or whatever the case might be. So let's say 36750. So what you're expecting is price to go up to let's say 36750, and then from there it will push down. So you go here, sell limit 36750. Obviously your stop loss will be above, so let's say it's 3690, and then your take profit is below, let's say 3630, just for example, and then you place. So now, if I just exit this, let me just remove these things here. Okay, so what this means is price needs to push up, push up, push up. Once it reaches this sell limit level, it will open a sell. Once it reaches this sell limit level, it will open a sell. If it carries on going up, you will obviously lose. But, you know, if it goes up, let's say up until this point, okay, you'll be in a little bit of drawdown, but if it starts decreasing after that, you will profit. If it is your take profit, then you've, you know, profited off that trade. Plain and simple. That's how, you know, a sell limit works.